to me, honestly. I'm here. I'm here. I'm here. I've been so far away. I don't know when I changed. Your voice replaying in my mind. I'm not prepared this
What's up, everybody? We're gonna get started here. Taking a look at the numbers coming in. Retail sales year over year way down. Retail sales month over month slightly down. Market's pulling back just a little bit. Be careful today. Can turn into an event type catalyst. Nothing looking too crazy just yet. We're interacting with Triple B likely again today, and this is the last day until we get another one. This is one of the calculations we teach at Rocket Scooter. Has to do with the VIX and the monthly outlook and forecast there. Market's still looking pretty strong. Still resilient to these downside moves, so I'm not too worried about everything yet, man. Hoping to get the market's going to drop, in my opinion. We're going to rally to highs from this breakout before we drop. Typically, markets don't just consolidate and fall, and people call them like diamond tops or whatever. I don't think we're in that kind of a mode where the diamond top is at the top, not in the middle. We usually consolidate that way. Typically, consolidations before they break up or down push one way before they push the other. You got to squeeze somebody before they go. It's traditional market mechanics, you know, I've seen those all the time. So I'm thinking, the short squeeze still pushing up above monthly hedge, no VIX problems. Everything's still looking okay. I still think we squeeze higher for lower. I think we squeeze higher for a little bit, but we'll see. We have no DD band touches. We look like pretty solid overnight for all three indices here. Hold on a second. All right, y'all, let's do this. Hit that like button. Let's get ready to go. Morning, 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 morning. Yeah, dude, I love Maddie on. I think it just switched automatically to the next. It switched automatically to the next song on that playlist automatically, which, of course, you know, copyright strikes. Like I really care because I'd rather just play the music I like, but it's not. It's probably obviously gonna get like a copyright notification. Like I care if I'll share the $2 of ad revenue with one of my favorite artists on the planet. He's great. Technicolor, to me, is one of the greatest EDM opens of all songs of all time. It's just so good. Technicolor always like gives me goosebumps. If y'all have ever heard that song, that open is just like legit cool. Okay. All right, we have all the rules have been completely patched in and completely fixed, so we're looking pretty good on that today. Let me go ahead and mark the DD bands really quick. Decent here. All right, let's see what we got. Let me go ahead and mark where those likely are. They're about 20 points lower. Retake 409 about there. Resiliences are positive, which is good. Let's see where the upper band, like I'm just kind of guessing right now where the bands are, about 418. We up here. Bears side, bears short up. Where's my, oh, here it is. I turned them off from the demonstration yesterday. Perfect. Okay. We are bears short up near the top right at hedge pressure. That's the one interesting setup here. Okay, so bears short up, resistance at hedge pressure to monthly. So there's some downside move from here down the DD band. Hopefully DD bands, the DD number comes in positive. We can actually push on break through hedge pressure. Be very careful with hedge pressure break. Index divergence alert. Did that work really well today? Perfect. Okay, just to show that they're slightly off by at least 20. That's good. The yellow one is perfect. That's good. I like what I see. We get through a hedge pressure break, then I might want to take a long here with the DD being positive here. We have NASDAQ just pushing really hard. Obviously, NASDAQ resilience is slightly higher. We had to go to fill the gap on NASDAQ right out the door, which is pretty good. It's a pretty expected move on a resilience being positive. Mean reversion long up. DD does break the middle as soon as we get all those calculations coming through. Let's check on the status of that. Right when they're about 50%, we'll start to get that DD number coming in. I do like what I see. 76 DD, great. Bullseye going up there. Yeah, IWM showing one more side. Bear long down. Bear long down right here. Resistance off of monthly, so we have a little bit upside in 174 on the Russell as well. Decent day. Things are looking good. Let's go on the setup, y'all. Give me a second, I will. Looks decent there. Across the board. All right, it's an up day. Good deal. Golden setup. All things are pointing in one direction. Bullish DD, bullish resilience. The only thing we don't have is a bullish liquidity map, so. So in UVXY here, as we were trading, just be cognizant of a UVXY bounce off of here. We are in an ill liquidity pocket, so the VVIX is going to be up. The VIX is going to move a little bit faster than normal, so be careful. Just for spontaneous changes in volatility. Things are looking pretty okay. I like the way I see, so all signs are looking good. do like what I'm seeing. Talking so fast, yeah. It's well, I mean, the first 2 or 3 minutes, I got to go through fast at all the stuff. Yeah, you can always replay and go back and see it. You have to make a quick decision. Hedge pressure breaks are rarer than hedge pressure rejections, so it's about 11% chance that hedge pressure statistically breaks on SPY. So typically, you open below, you want it to reject and come down. So if it's going to break, looks like it's going to go forward. Let me talk about it real quick. I am taking a long in my 10K account, though. I am contemplating taking a small long here. Small long here. At least trading to the mean reversion level. And DD, you guys remember the class from yesterday? DD being bullish breaks the tie from the middle from here to there. So I'm looking for a 412 to 413 scalp. Oh, my bad. Thank you for letting me know. What's up? All right. Oh, retail sales came in today, right? Talking about that really quick. Resilience can predict hedge break. Y'all remember that video? Remember that video? So we open below hedge pressure. We're trading below the redistribution zone, and resilience is very positive. So keep an eyeball there. SPY, likely hedge break to the upside. Index divergence likely here, so be careful. 2 yellow lights means I'm betting small-ish, nothing too big. Half gap in the middle of the liquidity pocket. No, but today it's close to it. Half gap is the middle of the gap. So whenever you close yesterday and open today, half gap is the middle point of the gap. So this is unusual to see this spreading with resilience positive. Oh, excuse me. It's at 41, 40 again. That's like that level we've been at for a while. So everybody's been talking about this like key support level. Right here. We have had 2 yellow lines in this 4140 level. There's an upward and a downward. And we've both just been hovering and pivoting that line for a very long time. Look, guys, resilience is positive and we're trading below the redistribution zone. If that's not a move up to here at any point in time, I'm going to eat my shoe here. So hedge pressure in the middle of redistribution zone with positive resilience. If you guys remember, so let's keep my fingers crossed here. If resilience goes negative, I would be a little concerned here because there's no mechanic just yet. So DD 70, right, obviously pointing towards here from the middle. Resilience being greater than 0. That's a move. So boom, boom, and of course, hedge pressure break can be forecasted because resilience is greater than 0. Easy to see. DD greater than res, greater than liquidity map. So I'm betting on a hedge break today. We've seen this very... Hold on one second. We have a video called Resilience Can Predict Hedge Pressure Break because of the ranking system. So resilience outranks hedge pressure. And as I'm talking, there it goes. I'm going to eat my shoe here. My shoes are made of chocolate, though. With just like little candy with whipped cream on it. And actually, all of my shoes, I kind of have some pretty good shoes. Actually, I don't want to eat any of them. My shoes are made of chocolate. Now I've got the 1975 song stuck in my head. Have you ever heard Chocolate by the 1975? 1975 is one of my favorite bands of the modern indie movement. This yesterday in reverse, but the difference with yesterday was we had hedge pressure breaks. We had one on the Russell at first, which brought everything else down. Well, that's pretty clean. Let's go. Let's go. Hit that like button, baby. Smash it, smash it, smash it. Let's go. Look at the volume that comes here on hedge pressure break. Rocket Scooter predicts volume. Everything we show you here is a volume prediction. Half gap, volume, hedge pressure, volume, volume. Resilience predicts hedge break. That was gimme trade today. Right now, again, trading's not easy. We have to always, that's why we follow the rules here. We let you know that trading's not for everybody. Just because you see me in here doing something doesn't mean that my results can indicate your results. Doesn't mean all that stuff. Even though I get highly encouraging and like enthusiastic about my own trades. Just remember, trading's hard. Oh, killing it. Hold on 1 second. My bad. Why'd I keep showing the wrong screen there? At least at 413. So we have one rule. We actually taught a class on it yesterday. DD is such a cool number. It's one of the most versatile indicators that we have. All right, y'all. Talking on spaces here. My bad. Okay. is my? Let's go. What's up, you guys? What's up, you guys? Okay, let me draw this again. Interesting to see this pop like this. This is what I'm looking for. Okay, this is weird. Now resilience is pushing back. Damn it, that's crazy. It didn't even connect. All right, fuck this. What is going on? Do we have? Wait, hold on. Let me double check. Let me see if there's any else coming in the news here. Business inventory is coming through. That's really weird. What the heck is that candle coming through? 20,000 contracts? What the fuck? What just came through at 850 on that hedge to the downside? That's a huge snapback. That somebody's dumping something. Let's look at the stocks. Hold on. 20,000 contracts in the S&P. That's ridiculous. I need to be careful. That's yet about. Who knows, man? Remember 4140? Let's go back here really quick. Talk about yellow lines really quick, right? This is pretty violent. So what the hell is going on here? So we have an upside yellow line from here. We also have a downside yellow line from back over here. So yellow lines are breakout targets from past like impact zones. So like for here, an impact creates a yellow line. So from the downside move off of the 43.25 high, that's a yellow line. That's a massive pivot from everybody short, right? And then of course everybody long from here, from that last pivot in March, that's a yellow line for them. And then the fact that they're right on top of each other, this entire level has been just this consolidating magnet and a very large nasty pivot for the last, I don't know how many, for a couple of weeks. Yeah, VIX is not moving either, as Ashton is saying. This could just be over a little bit over hedging right at that yellow line, but that's pretty crazy. That amount of contract coming off of there. That's shifting the market down pretty rapidly. So I can't explain it. Let's see if there's any stocks that are breaking through hedge that cause a big deal. Apple has a monthly hedge break. To the upside, though. Yeah, I did. Well, one of the things that I'm looking that pairs up kind of with that same point in time, we did see Bank of America broke through. I'm just looking at the monthly hedge break. So anytime something happens, Rocket Scooter, I can also have the tools to go there and try to find out what's going on. I'm looking. It's okay. So if y'all heard me on Spaces, I think I isolated what's going on. Looks like financials. So the idea that you don't see the Nasdaq dropping as much as you see the S&P dropping, easily for you to identify that it's a unique sector to the S&P, not related to Nasdaq. So it's either energy or financials. And the fact that financials, the XLF had a massive candle on that drop. It looks like people are dumping bank stocks before Fed speakers, right? So we have 3 Fed speakers today, and we have a testimony today as well. So it could be some leaked information. Somebody getting out of the way. And look at that. Using Rocket Scooter figured it out quickly. The idea that S&P resilience is down, Nasdaq resilience stayed the fort, you know it has to do with one of the non-overlapping sectors. Easy as that. Debt ceiling talk too. He's on Spaces likely. Oh yeah, it's true. I am on Spaces. I forget to say I mute my mic. I get habitually do that. I forget. You can't hear me anymore. I used to do it because of feedback. I shouldn't mute it when I'm on Spaces. Okay. Do I incorporate VIX one day into your data? Nah, VIX one day is just noise. We thought about it. It's good, I think, if you want to see where volume starts picking up for those 0 days. It's probably good in the last couple hours, like for last minute decision making, last couple hours of the day of each expiration day. But as far as like a telltale sign of volatility, the day-to-day 0 day, even though it's a lot of money tied up in 0 days, a lot of positions moving, it's not a lot of standing risk. Standing risk is like a fund owns, 20 million shares of Apple, right? Their standing risk is that, and they may shift up and down 100,000, 40,000, 50,000 shares, whatever, and they're out there buying options to hedge their changes day to day. It doesn't really reflect the accurate sentiment of the market much more than just shows that shorter term risk. As you know, the 30-day VIX kind of captures that 14-day window around the 30 days out. And so what you got is a more kind of uniform look of risk, and because it's wider and it's a larger expiration range, it's less noisy. So we contemplated, like, should we create something with this 1-day VIX or the 3-day VIX or any of these other ones? And the answer is I can't see any reason why. Like, what would it tell us that the other VIX wouldn't tell us, right? People aren't buying the 1-day expirations to hedge massive amounts of standing risk. They might buy those to hedge a change in a position or get into a position. Hold on one second. Yeah, I agree. Like I said earlier, the first thing you do whenever you see a large drop in one index or anything, right? 20,000 contract or greater is very high for any 1 minute period of S&P. You know, average, you're talking like a couple grand typically outside of the open. So what I do is I always put the S&P and the Nasdaq and the Russell together. I want to see where people are shifting their risk to. Mostly the S&P and Russell, like you have large cap and small cap. And since the S&P and Russell both were coming down and Nasdaq just came down just a little bit, and you can look at resilience on Rocket Scooter, it tells you the same story, right? You have Nasdaq is almost 50% really strong and bullish, and S&P fell right to zero and went a little bit below. So that divergence tells me there's something going on in the S&P sectors that's not going on in the Nasdaq to a degree. So immediately in this environment, you always go to the ones that don't overlap, right? You have energy and financials. And so with the Fed speakers coming, you see how we kind of draw ourselves to a conclusion, right? It's like in our trader boot camp, we teach fundamental courses that go over this. I think people out there are scrambling to figure out what's going on. Maybe something happened, but it's easy to see that, you know, something went on in financials. So pulled up the XLF. The XLF dropped with a large, it's on my screen right now. There's a large volume candle just the same that matches what happened in the S&P. So I see some other bank stocks broke monthly hedge pressures, which also created volume there. Individual stocks. So now it looks like people are dumping bank stocks ahead of Fed speakers. So, you know, you kind of put on your tinfoil hat there and understand either somebody's getting out of the way of something they know is going to be said, or market makers are just positioning the market, squeezing some people out before some good news comes out. Who knows? But the idea is that this is likely related to what's going on today. I would say that I'm trying to read the news and don't see anything related to the banking sector. So it could just be some pre-Fed, maneuvering. And so, be able to draw conclusions like that as a trader, if you're going out there twittering, like we said, we asked everybody here, what do you see? And none of us see any news anywhere on Twitter, right? So sometimes as a trader, you have to be armed and equipped to go out there and figure it out yourself and draw a good conclusion. Whether I'm completely wrong or not, it's pretty plausible because you do see the evidence by just starting at the top, and we call it root cause analysis. Just keep backing in until you find an answer. So it looks like right now I've got my eyes peeled. Like I'm staring at XLF, right? And it has a monthly hedge pressure, which is the larger sentiment going into expiration on Friday. 32 is a large actionable pivot for XLF, which is the financial sector spider. So my eyes are watching that. I'm going to watch that all day long to make sure nothing slips, because that was pretty nasty. So I don't really fear this candle just yet. DD barely budged, which means people got out of banks and jumped into something else, didn't they? Ashton knows that. So this is a shakeout in one sector, and the fact that the Nasdaq held the fort, it just means that people got out of one thing and they're getting into another. And if I'm looking at the stronger sectors today, then I'm going to go to the next layer and say maybe people are going into the tech companies again, because those are the ones that are looking pretty strong. And tech's nice and bullish. I mean, it's trading still higher than the open, and also filled its gap yesterday. So now you just see some really strong sector rotating. It's the first thing we said when the market opened. So again, you have to be very careful with hedge pressure breaks. The market can be chaotic and random. Right now, nothing scary yet, and I think just being able to draw good conclusions as traders is one of the things that I'm glad y'all are here with us in the spaces, because there's some really smart folks in here. I like this entire panel, and they all come up with some pretty cool ideas. I'm still hanging in. I'm deciding if I'm not dumping my long yet, but I'm just slightly underwater. Integrating OpenAI and Chat GTP with Rocket Scooter. We haven't considered anything like that yet. Mm-hmm. Mm-hmm. I use a news aggregator called Financial Juice. What the hell is going on here? $4.11. I'm just gonna bow out. What a weird. IWMs continue to fall. Small regional banks. So. Wow, what a weird read. I don't think I'm gonna hold and hope on this. When in doubt, just sit out. Start just closing some of that out. Get S&P and daily. I'm right at my stop, and XLF is falling with nothing to support. Man, you guys don't normally see me on a 3 or 4 day losing streak. That's pretty. It's getting harder to trade this market in this consolidated range. So what it does tell you is that something's ready to break out. There's a lot of positional shifting going on. Something's ready to break out. 410.79 red line. Let me check really quick. Market's getting ready to break. Are you talking about yesterday? It means things are getting ready to move. That's all it means. IWM hedge pressure break. Yeah. Tesla. Bull side is still holding. Bear side, bull side's actually getting stronger. We do have monthly expiration coming through. Let's double check VIX. Oh, VIX touched triple V. Okay, check it out. There we go. So this is something to take note of today. So be careful. This is a volume pivot in the VIX. Now this number does change tonight. Remember, we do get a new number for the next month, and I'll do that this evening. This is the last day of this fixed contract. Triple B, so. We also have monthly expiration, but look at the monthly map though. Look, the market is still holding the bull side. Bull side's getting stronger, bear side's getting weaker. Like, it just does not have that structure to break out. Yeah, it needs to break and start collapsing for it to be bearish. So you need some kind of break into bear territory. We'll know if we're getting it. Crash today, get out. Nah. No crash today. There's no crash mechanic. Just be careful. IWM hedge breaks. We're going to watch that. See if that makes any problems for us. Browser locked out. Let me close this down really quick. Keep an eye on for so Russell would be the one that would be interacting with its lower bands. No, I just trimmed. You can see my positions here. I just trimmed a little bit. Just took a little risk off the table. This is what's causing the moves right here. It's completely financials. XLF hedge break. It's just one sector. That's interesting. Maybe two sectors. XLC hanging in there. It's not, I'm not, this is not a crash day. No. Let's see XLY, because that would be the weaker ones related to some of these earnings coming through. Home Depot today. Came in okay, so tomorrow. Cisco and Target tomorrow. Anything big? 10 cent. MK, normally I don't trust a large candle of a large print from like one order or one drop. I like to see something fight at hedge pressure and then break hedge pressure and collapse everybody instead of collapse a few people. So large candles like that, I only get scared if it breaks through at least a strike on the other side. So Walmart earnings, Alibaba earnings, a lot of these are going to be maybe just pre-positioning for that. Hard to say. But all the other sectors look pretty strong, I would say, right? So like it doesn't mean like, yeah, I'm definitely on alert, right? So anytime something like that happens, we know that's unusual. SPY did open below hedge, so it wants to close below hedge. Betting on a hedge break is the rarer case. As I said, there's only 11% chance you do break through, but resilience can indicate hedge pressure break. Now again, we are irrational, so I need this to be above 10 or less than negative 10 for me to be a little more convinced of its move. Being right at slightly negative 0.4, Nasdaq being at 40, that's a large divergence, right, between the two. Oh, there's a case that's missing. I just noticed a bug there. That should be yellow. Okay, I found a case where the divergence is also missing. So it is a case where one is negative and one is positive, and they're one slightly below. So essentially, when one is greater than 10, one is less than 10, it's going to be red. If the distance is just 20 or less, it's supposed to be yellow. But there's a bug that when S&P was barely negative and this was 50, it should have been yellow, but it was green. So I'm just writing a note of that because we've been rewriting the code. That was Matt overlooking one of the cases. Hedge break arrows are amazing. I know. I'm so happy to see them. It reminds me of what happened. Like, oh, okay, S&P was breaking its hedge break up. So that's where that yellow came from. So this tells me the S&P broke through hedge pressure and now came back down. This tells me IWM has broken hedge pressure, still under hedge pressure, all in one spot. Love it. I know, right? It's like, it's a no-brainer. It's like the little things, right? You make something, then you're like, oh, that would be great too. I do love it. All right. Love you guys. Thanks for joining in this morning. If it's your first time at Rocket Scooter, feel free to give us some, or throw some questions in chat. Let me know if you have any questions about what you see. Like I said, I'm not scared of this. Now, I do get cautious, right? Whenever you do have drop candles like that, but I have to understand why. And if the why has to do with it just being one sector, if all the other sectors are hanging in there and being okay, and some of the other sectors are getting stronger, then I'm not that necessarily scared of what I see. Let's analyze the commitment of traders really quick. Dealers are still net positive, and you're still not losing any of this in the long side of the market either over the last couple of weeks. Now this is a week delayed data, but you are getting more short and more long. Yeah, actually, let's compare the two. Yeah, more short. So the market's becoming liquid here, just preventing it from crashes. We know one rule is that liquid markets don't crash on their own without a catalyst to capsize the market. Rule number two is that typically that doesn't mean you can't have like a really nasty red day. When I say crash, my definition of the crash is 3 red days in a row with lower lows. You don't have that crash mentality when the dealers are holding the bag. They don't crash themselves when there are willing buyers. The green line are willing buyers, right? This is your institutional asset managers. These are your, 401ks. That's in this category. Everybody's longing stocks all up in here. Buying since October, selling a little bit, buying since March. And not selling. The net position is still the same. People are rotating from one sector to the next, but not like in the recession when there was just waves and waves and waves of selling. You're having waves of buying. And of course, people shorting against the buyers. And the dealers, the net deficit of the two, between that contrarian side and so these are all the buy side of the market, like these three right here. And that's what they call the sell side of the dealer. So the dealers, they provide liquidity. So the dealer is the balance between all the other traders. You can tend to see that like smaller regional banks or Federal Reserves banks are in here, and you have hedge funds in there. Larger banks, right? So hedge funds and commodity pools and things here. Larger banks are this red line. So when the banks are holding a positive position and they're the ones quoting the bid and ask, they just don't ever nuke the market on themselves. They hold the inventory and there's willing buyers. So why would you lower the price when you have an inventory and there's buyers? Yeah, people are shorting against you. Why pay them out? Why not just continue to raise the price, force these traders to lose and force these people to take your bag? That's what you tend to see with this particular setup. And in the history of this report, it's a cool thing we teach you guys. When that setup is there like that in the history of this TFF report, stock market has never once crashed under its own weight in the 20-year history of this report. When you have that exact setup, let me show it to you. So neat observations we do make here. When that line is up, and this line is down, and this line is above zero, never once has the market crashed. Pretty cool, right? It's positions, right? You have longs becoming more long, dealers holding the inventory, trying to find buyers. Well, there they are. People shorting against the banks, but if the banks were to drop the price, they have to pay out these folks, and they're going to lose on their own trades, right? As long as people are buying, they can continue to raise the price. The banks bought when everyone sold to them at the low. They can continue to raise the price as buyers step in and make a profit and squeeze out the shorts and make a second profit. You don't crash your own market when you make the market. So the times where this line has been above zero, let me, as you can see, the market doesn't collapse on its own. There's a wave up right there, right here, wave up right there, above zero, wave up, above zero, wave up, above zero, wave up before it came down. It doesn't come down until that red line is below zero. And I say come down, I mean like crash down. Let me see if I can't scroll to the left and right. Oh, I can. Okay, perfect. Let's do it this way. Let's look at the only time we had another recession. In this particular, oops, let me go back. Where's my drawings? Okay. In this particular session, green line section up, check. This particular section, blue line going down, yeah, check. This particular section, red line above zero, and check. Okay, what happened exactly here? The market found higher highs before the market crash. And it didn't crash until they were negative. The banks don't crash themselves. They themselves will be short before they drop the price. Does everyone throw a big yes in chat if you understand that phenomenon? Like why would you go gobble up all the inventory of something and now you own the market? He who holds the inventory makes the price, sets the price, right? Y'all get it? Once you were out of your long trade and let the market fall. Easy to see. Okay. All right. So it doesn't mean you can have a nasty red day. Let's draw that again. It just means if you have buyers that are willing to become more long, probably to go into stocks to escape inflation. You have people shorting against you. As long as there's buyers here, the dealer is holding the bag and you have people shorting against the buyers. Markets don't fall under the condition. They never have. Never once before. Here's another thing. People sold. This is a different scenario, so let's talk about this one. They're pinching together instead of pulling apart. It's a different setup, but similar, right? Oops. Let's go back to where we were. Oh yeah, market's gonna be safe today, I think. No scariness there. The other thing is that in reverse when they're pointing together. So let's think about the two. And I love this lesson. You guys are gonna learn so much right here. We teach a class on this. Okay. The difference is when longs are going more long and shorts are going more short. Okay. There are people entering new trades and people entering new trades. Shorts becoming more short, so they're in a position. Longs going more long, they're in a position that gets bigger. This is longs exiting longs, and these are shorts exiting shorts. So people are actually leaving the market, but at an equal rate. So the difference between this one and this one, while you still have a buyer and seller fight each other, this one is more liquid because you have more traders, right? Liquid is not a G, it's a Q. You have the number of traders going up. This one is less liquid, so more liquid means less volatile. Okay. This one means less liquid. Number of traders go down. And it's a little bit more volatile. So, as we make that analysis, you see how that works? So look right here. Where's it at? Oops, let me go back to the chart. So it's a similar setup, but it's actually going to be volatile instead of not so volatile. So here's the second time dealers above zero right here. Wait, was that the... Where was that at? Here it is. Okay. So look in this area right here. Actually, maybe I missed the case I was drawing. Maybe it was another one here. Hold on, they're calling me on spaces. Determine space. Yep. What's up? All right, guys. Sorry, I had to give my closing. We're shifting the spaces over, so I was giving my closing talk. Okay. Where are we here? Okay. Okay, let's go back. So essentially what happens is you have a wave up until the dealers are negative, and the dealers finally go negative here. You had 2 more weeks of squeeze before it came down. All right. Here. This particular case, when you have the 2 lines parallel, selling and shorting, it's one-sided selling, right? Everyone's selling and everybody's shorting. The banks are buying. Typically, when everybody's betting against the house, the banks will squeeze people out as well. Like when everybody wants to short against that like flash crash we had right there. You can see, was this 2011? Oh, that's the 2011 crash. So here, right here, you even see at this point in time, market continue to squeeze higher. As long as the banks are finding buyers and they're holding the bag, the market still squeezes higher. So every time that red line's above 0, you will see that. I mean, it's just easy to see. Again, you had the 2015 flash crash, that kind of like double crash we had. Here. Right? Everybody's selling and the dealers are now positive again. Big, big, big nasty collapse. And then, of course, it's volatile. But until the dealers, like as long as the dealers are positive, this red line is above the 0 point right here. See how it's not collapsing? And then finally when they're negative, a couple days later, a little lump, right? Or a couple weeks later, is your weekly charts. So anytime this red line goes above 0, the market just holds itself. It holds its own. And even red days, they turn to green days. They really much... And it's just a neat phenomenon to see, right? So the overall, even though they went negative, positive, you think from here to here, from this point in time until this point in time, the S&P went from a low of 1820 to 2200. I mean, that's like 15%, right? So you're going to see that the market just does not, the banks don't bankrupt themselves. I mean, it's the easiest analysis to make. Post-COVID, markets kind of get nasty, and the banks hold the bag right here. All through this. Everybody's shorting, right? This is June of the middle of the year. Everybody's shorting. This is before we had the vaccine. This is before the new election. So people are betting on the market and betting on the Democrats coming to office and shutting down again. So this is why there was a big short. Again, this is not a political talk. This is just a Wall Street talk. So, right, since in Congress, you had the Democrats are the ones pressing for the shutdown and pressing for masks and control and such. You would bet as a trader that if the Democrats were going to win the election, then that there's a second probability if we didn't have a vaccine, or a second chance that we would have another shutdown, which people were positioning for that as well, which makes a whole lot of sense, right? People are shorting on round 2 of COVID to bet that we have a round 2 shutdown. Guys, we got to shut down all the businesses again, quarantine again. Not a terrible bet to make if you're betting on the outcome of the election. So clearly those that bet on Democratic victory were betting right here, betting on a second shutdown. But then we got a vaccine and then they got squeezed. And so once the vaccine happened, you can see that the shorts just continue to get squeezed all through the year as the effects of COVID weren't permanent on the stock market, right? Or permanent on the labor market. People weren't getting shut down again. So those bets slowly unwound. And again, right here, the dealers are holding the bag. Such a massive selling and shorting bet. Here you have both of them pointing towards each other. This is this part where the market is more volatile. And you can see that in this environment right here, that nice little drizzle up, bigger candles, there's that more volatility as shown right here. It's bigger. And then of course, they start fanning out again, the blue and green like here, and it becomes less volatile. So more volatile, larger runs, less volatile, smaller runs. It's so great how you can do this to make these analysis. And you guys joining Rocket Scooter, the whole point is that inside of our community, we teach you how to think like this. You can see why the market does a lot of things it does. It's not just guessing. It's not just looking at trends. This is since the recession highs. Then the market pulls back about right here. Right inside of here, the others go positive. Right here in the middle of June. Or the beginning of June. And ever since then, the market did not collapse. Actually, it rallied a little bit. Still recession level mechanics, and dealers are still positive. And of course, the rally was held. And then now we had an outage, like a reporting outage. This reminds me of the look that we had way back here, like a reporting outage, right? It's so weird that, you know, for like 2 months, we didn't have command of traders data, and all of a sudden we do, and the banks are positive. So like right in here, it's like the hand was concealed for like a couple months. We didn't know. Then finally the data comes out and they're positive, and we're like, well, what the hell, right? That's little shenanigans. But hey, this is definitely crash prevention. People are shorting against the dealers, and you don't know how short they are. Well, 260, the data comes in. Oh, and that's really 460. Oh, wow, that's more short than we thought. Dealers are actually negative 70. The data comes in finally 2 months later. Oh, they're actually positive now. Okay. So in this moment in time, Ash and I have been screaming, this market's not going to crash. And everybody is finally starting to get the hang of that right up in here. Okay, maybe the market's bullish. But we said it was the bottom in October because of the same mechanic here. Fanning out, red positive, fanning out, red positive. No volatility, very liquid market. Have we seen the market be volatile ever since October? No. The volatility has collapsed. The VIX has been collapsed on itself. So the idea is that the market's just consolidating in a very strong pivot. So as long as this red line is positive, we could have some downside moves, but any nasty red day would likely be followed by a green day. Volatility is not present yet. Now we're in the place where they're both starting to fan out again. So volatility should collapse and dry up, which it is doing. These candles are getting smaller. So we have to see a sentiment change. Now remember, this is week delayed data, but because this number has been positive since March, none of us here have been shorting a greater macro, of course, and we've been staring at the market and just trying to find longs to get in on. Now again, doesn't mean every day is a winning day, every day is a bull day. It just means in general, I'm not expecting the market to collapse on itself. Yeah, it's rigged, and that's the second time in the TFF report you see that. You saw that right before. Remember, one of the examples I showed before as well was that, oh, oops. Yeah, there's a reporting error. We can't report our data. Oh, here it is. Here post-COVID, same shit. June. Oh, and then the next day. Oh, it's like, oh, wait, here it is. By the way, we're actually 300,000 contracts difference. You don't normally see a large positional change like that. You're, you know, with your not to call conspiracy, but with your tinfoil hat on here. And then finally the data comes through. Oh, there it really is here. Oh, okay. And then the stock market crashes 2 weeks later. Yeah, it's pretty much evidence or a suggestive. Let's not play conspiracy theory here. It's highly suggestive about how the casino sleight of hand, clearly, as this is the reveal of people's active positions, and the hiding the net accumulation is the same thing a penny stock pump and dumper fucking does every day. That will accumulate little by little by little. Then all of a sudden, oh, here's my position. Oh, you're very long that thing. Oh, Oh yeah, spam dumpster. Yeah, totally. They went long while the report was not published, or you know, they say there was technical difficulties. They not to point fingers at whoever, but clearly it's, you know, technical difficulties. You go out there and hire yourself some teenage hacker on Reddit. Like, who knows what people do in the modern day, right? But clearly it's suspect. It's suspect because the outage takes place and then the position, it goes from negative to positive or positive to negative. It's like not revealing your hand as you're changing your overall sentiment of the entire market. How many tens of billions, hundreds of billions of dollars are being shifted from long to short in the dark? Yeah, and so like as we're here, the Rocket Scooter group is tasked with trying to figure out how things like that happen. So as we as retail can be more empowered to understand the market we're trading against, like how it's rigged against us, right? This particular, like at this point in time, we were like, oh shit, the market can collapse again. We are fanning out and this became negative. Okay, so it's liquid, less volatile, which is scary because the drops aren't volatile, right? It has to do with native selling. And this is now negative. So you can say, okay, well, active sellers, active shorts, dealers are short. Right here, it was like, oh, fuck, the market's going to crash. And I made a post back here that said, I'm actually really scared of this market. The bear market's likely back. But then from January until here, we were in a blackout where we couldn't read the data. So I'm not sure how accurate all of this is. But the idea that you had active selling, active shorts, and banks were negative, right here, I was very scared. Very scared of the market. And that's when I made my tweet. I said the bear market's likely back. And then COT data disappears and then comes back when it's, oh, never mind, things are great. Not liquid, banks are holding the bag, we're good. Like, what? What? So that's it. Like, that's the whole point, right? And so, you know, being here, the goal is to find things. You know, there's a lot of things that just escape you. And if you're still out there, drawing like this and your charts look like this, you know, good luck to you, sir or ma'am. Like, if you think this is telling you that banks are here, triangle pattern, that sounds pretty cool. I think I learned that when I was 4. So does anybody's chart look like that? Can I draw emojis on here? Here, let's put smiley faces for all my entry points. Let's put here so you guys know that we're gonna YOLO. I'm gonna make sure I can see inside information and bank shenanigans by pulling out my box of Crayola markers. You know, you're in a world of change. Same with 13 filings for institutions. They only report long and only their short and not their short positions. JPM is a massive gold short positioner telling retail traders to buy. Well, I mean, wasn't the idea that, I mean, think of the mortgage crisis, right? Credit default swap was, so a swap is where you pay, swap is like an insurance contract, right? It's an established cash flow that you pay a premium to be in. An example is car insurance as a swap. If you think about it, you pay a premium every month. And if the car crashes, just like the stock market crashes, they pay you out, right? This song's pretty dope. What is this? So you pay a premium every month, and if it crashes, you get paid out. So credit default swap is the same way. It's car insurance for the stock market or the housing market. If people default on their mortgages and you're betting against mortgage bonds, then you pay a premium every month to sustain that bet. You call it collateral. Pay a collateral payment, sustaining that bet, and if the market crashes on that thing that you have a swap against, you get a payout. Well, what are the insurance folks going to do who sold you that swap, right? They got to be hedged themselves or they take a huge hit. What if everybody goes out there and crashes their car the same day? Well, they can't pay out everybody. They don't have the ability to do that. So if the risk gets high enough, they themselves have to be short the market. Either A, they got to go own a bunch of cars so that they can also benefit from the payout, or they need to go out there and also buy that insurance from the open market. And so, like, if you remember, Michael Burry went out there and told banks, yeah, I want you to create a swap against mortgage bonds. People default on their mortgages and the bonds become worthless. I want to get paid out. And they laughed at him and said, sure, you know, like, yeah, we'll make that instrument and trade against you. Thanks for the free money. And then once they realized, shit, this guy's right, because they read his prospectus on all these bonds and were like, holy shit, they dug through it and go, this guy's right. This market is going to crash. And they go, well, fuck, we got to do something else. So they go out there and start talking about how it's worthless and how it's stupid and how it's free money. And then all these other well, he went to a bunch of banks to create it, but all the other smaller banks were like, oh, what an idiot. Let's start selling these default swaps too. And like the JP Morgans of the world were like, yeah, you guys should sell it. It's free money. This idiot totally gave us free money. And then other banks created those things like Lehman Brothers and Bear Stearns and all of them. And then JP Morgan, all these other vultures went out there and bought it from the other banks. They convinced them to make it. And they went there and accumulated the swaps themselves by convincing the other banks it was an easy bet. And they fell for it. And then who came out standing on the ashes of the smaller banks are the ones that propagated the idea that it was an easy bet when they knew they were wrong. So they had to get short for the market crash. And until the market crashed, they paid off the ratings agencies to do this like bureaucratic loophole on how they rate mortgage bonds, which is like diversification allows to have a safer rating. And they just kept repackaging these things and these CDOs, right? We talk about how they work. And they keep repackaging to where it would look, or it would start the process over. There's all these little things they did just to mask the risk until they bought themselves enough time to go out there and get short themselves. So how do you get short when someone's bet massively against you? Well, you go convince someone else to create that instrument and you trade against that bank. And that's exactly what they were doing, right? So it was such a, it's such a cool story to hear about, right? To think about, wow, that's the stuff that actually goes on. Thought you're just going to buy the market and this very fair casino just pays you out. That's not how it works at all. Convoluted spaghetti bowl, yeah. They masked their intent and masked their position and literally paid people off to buy themselves enough time to go short. And then when it was short, then the mortgage bonds get rated correctly. And then it's like, oh, shit, these are paying out. And then it collapsed. And then, isn't that crazy, right? Someone comes against you, comes to you and says, I want to make this really risky bet. And you're like, that's easy. I'm totally going to bet against you. And then you realize you were wrong and they were right. You're like, fuck, I got to convince someone else to trade against me. Let me go down the road and, hey, my best buddy Bob in the banking business. Hey, look, this idiot came here and shorting the housing market. He's like, what an idiot. You're like, yeah, I know. You want to get in on this with me? We're totally trading against this guy. Yeah, sure. Just go out there and create all these instruments and sell them to him too. And then he creates the instruments and then they're being sold out there and you get your traders to go out there and buy them from your friend. And then once everybody started to notice that, people were like scrambling themselves and trying to trade against each other, betting on each other's bets, right? Those synthetic CDOs. So then all of a sudden you had that just collapse on itself. Banking heroes. Rocket scared for president 2024. I don't know. I wouldn't last as president. People don't want to think as much as I try to think about stuff. I don't deliver things surface level with an impassioned speech to make everyone go, that guy's right. Wait, what did he just say? I don't care. He sounded great. They're like, God, this nerd won't shut the fuck up. He talks too much. Science, math, what is all this? They chased me out of Washington with pitchforks. Get out of here, Poindexter. A CDO of a CDO. Yeah, right. God, this is just this confusing day today. Let me try to get this updated. It's looking hella good right now. Nasdaq's starting to climb pretty good. I do like what I see here. Interesting. So I'm doing 2 trading challenges right now. I'm doing a 10K to 100K in a real account. I tweet those results. If you go to my Twitter, you'll see them. This is a elite trader funding 10K account. I'm sorry, I had 150K account. So I'm doing 2 things at once. Number 1 is I'm showing how to get a funded account and trade out to a $10,000 profit. The second one, I'm taking my real trading account with 10,000 and trading it to 100,000. The real trading account is 2/3 of the way to 100K. You can go see the stats on my Twitter. This does not reset every day. I don't know. This is the same account that's been there every day. Elite ETF is elite trader funding. So I'm doing a harder challenge on stream, which is to take a 150K funded account to 160K. So I haven't really made any large hit trades in this yet. Slightly underwater, 500 bucks. Yeah. But I don't do any paper trading account from a paper trading ever. This is an elite account, elite trader funding. Technically is paper. These funded trader accounts are paper, but I don't go into my personal account and paper trade. I've never ever once done that. Or reset an account. I don't do those things. It's the same account you've been watching since I started. I did 150K 2 times in a row. I've never done one of these before, but I'm doing it to show, and again, I'm making a video series. It's literally titled this. How I turned 300 bucks into 100K. So it's a 2-step video series. 300 bucks buys an ETF to get the first 10K payout. And if I reset, I reset if I have to. Right? I pay out 10K or 12.5K. And I've already been doing this challenge with my own 10K. And that account at the high, it was like at 66,000. So I'm almost there. So I'm doing them at the same time instead of taking more time to do it. So just to show it wasn't a fluke, I actually did 3 trader funding program evaluations in a row. I did 150K static. I beat it in 5 days, and I did it again, and I also beat it in 5 days. And at the same time, I was doing a 250K end of day drawdown. And I beat that in 12 days. So in a 12-day period, I ended up getting this one, and like I said, in about 2 weeks total, I had 450K funded. My first time of trading accounts. So I did that just to do it, to say that, I try to always think ahead. The naysayers will say, oh, that was a fluke, oh, that was a whatever. Well, these are 2 different styles. This is an end of day drawdown, which is different rules, has a daily loss limit and a drawdown limit. This has a drawdown limit, and these are static evals with different rules. So I did 2 different contests just to show, or 2 different evals just to show it wasn't a fluke. So I did 3 in a row, got to 450, literally told them, hey, just delete these 2. I don't even want them. And they were like, okay, wait, what? I was like, yeah, I don't want them. You don't want to trade those funded accounts? Nah, not really. I don't need 1099 income. I got my own trading account. I'll just keep one. Like, well, why are you doing this? And I was like, oh, I'm doing it to make a video, just to show me getting paid out. So I actually literally, I know people struggle to try to earn these accounts. I actually threw away, wait, no, 550. I can't even add. I'm stupid. Wait, I'm so stupid. This is 550. What did I say? 450. I'm an idiot. 550, because that's 300, 250, 550K. I'm like, that number did sound low. 550K. So I actually threw away 400K in funded accounts. I told them I didn't want it. I just want one. Why do you only want one? Well, I'm doing a video series like this, and I don't want people to claim shenanigans like I'm trading one, then trading another, and showing the winner. I literally only want one trading account. And I'm probably the first person in the history of prop funded accounts to go out there and literally say, I know I earned these evals, but delete them. I didn't just say I'm going to keep them on the sidelines and not use them. I literally said delete them, and they'll back me up. If I ever ask anybody from that company, I literally said delete them, so no one can say that I'm only showing you the winning account, hiding the losing one. I only have one in existence right now. That's transparency I want to bring to the table. So not only did it once, I did it 3 times to prove it wasn't a fluke, and I deleted the 2 I'm not going to use, so that you can't think I'm doing something like showing the winning one and hiding the losing one, yada yada. I only got one in existence. So that's this one. And it's hard to do, and I'm also being very meticulous about the trades, taking very low risk in these types of markets until I get a really strong signal. I need to get some float off of the loss limit here, and it's so far not going so hot. I've been bouncing like up 1,000, down 1,000 for like a couple weeks now. Not really progressing, but again, the signals have been kind of mucky at best anyways. So that's the process to take a funded account to get the first 10K payout. And that's what I am trying to work on. And even if this doesn't succeed, I mean, you can't always win all the time. I'll just do it again and start over from the process and get another one and go. And I want to just show the process of what I do and the journey I take to get there. And transparently, right? It's honestly, if I don't make it, I'll just try it again. And this account's still trucking along. This is the harder challenge, which is why I'm showing it on stream. So we're practicing risk management in a recession. Teaching that, obviously, you don't want to see anything other than the perfect control. And I have more control with more limitations because there's more rules that they give you, tighter rules here than what I give myself. Trying to turn your 310K barely 700 after touching 900. It's super hard and risky playing these degenerate 0 DTEs. Dude, it sucks. I know. And well, I mean, also it's a recession too. It's not the easiest market to trade, especially for, you know, newer traders. I mean, even veteran traders. It's not easy for anybody to trade. This has not been like the most. My other account, I have a little bit more flexibility. That's why I'm able to perform slightly better than here. I don't give myself a very tight drawdown that I can't lose. Here I have to be right and cut quick. My other account, I can have more flexibility to take 2 or 3 trades throughout the day. Here I got to be very careful. So the problem is that you have such tight limits in a recession. It's a little harder to get the fun. I'm telling you, I'm having a harder time doing this than I am with my normal account that doesn't have a static drawdown, right? That's as tight as this. I mean, I have a static drawdown I use when I trade. Clearly, like I only lose a certain amount, but it's certainly not $1,250 off of the starting point. So yeah, it is tough. That is how it goes. But hey, we're gonna go over. Like I said, I'll fill you guys in how this turns out. I like the idea that the Nasdaq's pressing highs for the day. I like the idea that Russell's starting to stabilize. We lost both hedge breaks. Russell broke hedge, is now stabilizing. Resiliences are now pushing positive. DD is now positive. I feel pretty confident. Unless something does change. Keep your eye out for the Fed speakers today. Everybody head over to the Discord in about 2 hours or so. We'll jump in and have ourselves another Zoom call. We'll cover resilience today. My 300 is 700. No, my 300 is not 700. My 300 is underwater just a little bit. I started at 150. So 148, 750 is the loss. So I'm basically just down like noise, $500. Like but it's again, I'm very close to the edge. We're not very close. $700 would have to be like in one trade, like a 30-point fall for me to get there. That's why I'm positioned the way that I am. So I make sure my position size is such that a 30-point drop on a catalyst doesn't kill me on the account. That's why I'm in 4. I'm at the max I can get without that squeeze hitting me, right? All right, guys, I love you guys. We'll see how we turn out today. Come on over to the Discord. Everyone, like I said, I'm going to check out Rockets here. $35 a month for the full experience. Rocket Scooter Trader Training Bootcamp continues today. Day 2, come on in. We'll teach you everything you need to know. Tired of your $5,000 software packages, your $400 a month Discord, $35 a month for all of it, including your live feeds, data feeds. You can't beat this price anywhere on Wall Street, and that's why we're making it the way that it is. About to round up our 4,000th user account in less than 1 year. That's a monumental feat. We'll probably get there tomorrow. So everyone check us out. Come on over. The link is in the description below, and you can jump right in and start your education today. We'll train you everything from risk management, position sizing. Why'd that dude have 4 contracts? Why is the stop here? Why is he longing here? Why is he shorting here? All those things we teach you. We'll give you the skills that you need to operate Rocket Scooter platform and teach you the style analysis. I use it for risk management. I use nothing else, and glad to bring it to y'all. Give you guys a 2-hour break. We'll jump back in and do a Zoom call.